Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Monday, January 26th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So a lot of green, a lot of red on the screen here. So the dollar extending its sell-off is speculation that the U.S. could coordinate intervention with Japanese authorities to help support the yen. So we're seeing stocks pull back with the S&P 500 down about 0.2%, 69.35. That's down about 10 points here. And you look at the NASDAQ down about 0.3% at 25,663. The Russell, after getting hammered on Friday, rebounding off its lowest levels here at 2643.90, back trading at 2672. So gold topping $5,000 an ounce and the precious metals extending its rally. So the dollar index, really one of the big stories out there. Not a lot of people talking about it here. Falling for the third straight day and losing ground against all major trading peers here and falling to the lowest level since September. You got the yen rallying to the highest in more than 2 months. So we trade the Japanese yen futures sitting down at 65.35. Rebounding just a touch, up about 1.4%. You look at gold, that average true range right around $100 here. So quite a bit of activity here, quite a bit of volatility in the gold market, tacking on about 2%, sitting at 5,088, topping over 5,100 on the February futures contracts. Now, this will be the last week of trading for that February contract. You're going to want to start to look at April. What a lot of people are doing is taking that Feb off and then they're scaling in using those smaller contracts, the 10-ounce contracts as well. Looking at silver futures sitting at 109.09, topping over $110 an ounce here. 110.06.5, up about 7.5%. You do also have platinum up 5%, palladium up 6%, aluminum up 1%, and copper edging higher here, just falling just short of that $6 mark. Now looking at some key levels here, the pivot point on the gold market sitting at 48.67, key trend support 45.72. You look at the silver, average true range $5.65. The CME cannot launch that 100-ounce contract soon enough here with this volatility in the market. Your pivot point is going to be 93.05, and that also comes in with key trend support right at 93.04. Looking at those ETF flows here, the ETFs, they were buying gold, they were buying platinum, they were selling silver and selling palladium. So you look at the percentage changes, tacking on about 0.2% as far as ETF flows here. And year-to-date ETF flows sitting right around that 1.4%. The exchange-traded funds added 341,000 troy ounces of gold on that move on Friday here, and gold's up about 15%. That was coming into today. It's probably up about 17% now year-to-date. You look at silver, those ETF flows, they continue to decline. People are just reducing some of their exposure in that market here, and year-to-date, the ETFs have declined 2.2%. And they cut another 2.3 million ounces on Friday here. So ETFs last week, they increased their gold holdings. They reduced silver, platinum, and palladium. You look at the gold-silver ratio dropping to about 46-1. That's a big sell-off overnight. It was about 49-1 on Friday. Big jump here as far as silver in correlation to the gold market. So stocks, they are set to open cautiously at the start of it. We've got a big week of calendar events. You got the Fed's rate decision. You also got 4 of the Mag 7 reporting results. Now, Canada, the largest target for Trump's tariff threats here, now coming into focus here with risk of another government shutdown also looming in the U.S. So you look at the S&P 500 again, down about 0.1%. The NASDAQ down about 2.5 tenths of a percent here, so 0.2%. So Trump threatened Canada with 100% tariffs on exports if the U.S. makes it, or if it makes a trade deal with China. So Canada said its efforts to diversify trade away from the U.S. won't be derailed. So you got this tit for tat as far as back and forth action between the U.S. and Canada. Now, other assets out there, one thing that we're watching, and a lot of traders here coming into the season here, into that winter season, we're looking at those March, those April natural gas call spreads here, with natural gas rebounding about 5.5% overnight, continuing to extend higher. The February contract really exploding, and natural gas soared as much as 20% as that freezing weather swept across the country, boosting that heating demand and disrupting the supply. So the winter storm has knocked out about 10% of U.S. natural gas production, just as that demand for heating and power plant fuel had jumped. So you look at the macro markets here, you have no major companies coming out with reported earnings today, but of the 64 of the S&P 500 that have reported so far, 78% have beaten the analyst estimates, 14% have missed. So it's going to be a busy week as the earnings season kicks off here with companies from more than a third of the S&P 500 due out to report. You're going to have Meta, Apple, Tesla, and Microsoft. As far as economic data here today, we won't have anything too significant. The Chicago Fed National Activity Index, readings on durable and capital good orders here for November, and you're going to have the Dallas Fed's manufacturing activity for January. So look at those rate cut expectations. They're really dwindling here. Doesn't look like that first rate cut isn't going to come until June. You got about a 2.8% chance that they cut at this January meeting. That's on the 28th. And then you also have about a 15% for the March meeting. So you look at the FX markets and do yourself a favor. Pull up a chart of the dollar index if you can. Tacking on another big sell-off here, down about 46 points, 96.94, breaking to the one of the lowest level in a few months here. And the euro currency really skyrocketing, 118.83 here. That's exploding higher. You got the Swiss franc. You also have the Australian dollar and the British pound all edging higher. You do have crude oil futures at 60.93. That's that April contract here. We'll look at the March contract sitting at 61.09. So both contracts right around 61, both over that $60 pivot level. And you got 10-year treasury yields hovering at 4.21%, really in this range from 4.29 down to about 4.11. The VIX, after that brief rise over 20 last week, sitting elevated, but at about 18.5. You got Bitcoin futures getting no love here with cryptocurrencies, a sea of red here, down about 1.6%, sitting just below that 88,000 mark and just on the edge of key trend support. You go over to Europe and Asia here, those European stocks that are muted. The travel sector really dropping as travelers face those disruptions here with the massive winter storm sweeping across the U.S. here. And then you have mining shares outperforming. You got Asian stocks that are mixed in some choppy trading in the MSCI. It rose as much as 1.1% before pairing some of its gains. I did a write-up on Kitco. If you go to kitco.com, it was one way to position for $100, $150 silver. And I was really looking for a blow-off top in this market here with futures already at 110. So I outlined an example of a call spread in that particular article here sitting for that August contract. And we'll have to revisit that one because with futures up about $8 here, the bid offer is going to be greatly different from what I publicized here. So I'm going to look at some other call spreads on that as well. A lot of traders here on the physical market looking for some kind of pullback as far as protecting their position. So I'm seeing a lot of put buying as well, thinking that there might be at some point in time a pullback in these metals markets, but it's really a lot of people are using the futures contracts to hedge some of their physical holdings until they can offload that. Now, if you guys got any questions on futures options trading, I suggest if you're thinking about opening up an account, get that going before they launch that 100-ounce silver contract. And then what I'm also seeing people do is they're taking they're booking a lot of gains here on some of these precious metals, on some of the mining stocks, and then what they're looking at diversifying some of their assets. So over at Blue Line Capital here, we're getting a lot of people that are shifting some of their accounts, shifting some balances and stuff like that, looking at a potential leg higher in U.S. equity markets because of the fact that the Federal Reserve, the next Fed chairman that comes in, really looking at the possibility of running this economy hot, which could be a big boost for the U.S. indices. Sorry to get that out here so tough, but looking at the Dow, just poking here positive. So we'll see. And then also something that a lot of people were not looking at that we were identifying is the possibility that this winter storm here could affect that winter wheat crop here. So we're seeing wheat futures tacking on a few cents here after a nice gain here last week as far as futures are concerned. So if you guys got any questions, you want to open up an account, shoot an email, info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.